Welcome to This Week in Money. I'm Jim Goddard. Today, David Morgan of the Morgan Report cautions precious metal investors there could be another drop in prices before a major rebound. Investment opportunity expert Martyn talks about the untold victims of the so-called Wolf of Wall Street the movie doesn't mention. We'll talk to David Morgan right after this.
Randy Elvis Frisky and his Las Vegas show band relive the movie music memories from Blue Hawaii to Viva Las Vegas, in Ladner, Chilliwack, Maple Ridge, Nanaimo, Victoria, Sydney, Courtenay, Campbell River, Surrey, Kelowna. Details at RandyElvisFrisky.com. Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is David Morgan, publisher of the Morgan Report, and also you can find his investment letter on silver-investor.com. Welcome to the show, David.
Thank you, Jim. It's great to be back.
You were one of the guest speakers at the Cambridge House Vancouver Resource Investment Conference. Well-attended speech, by the way. A lot of buzz about it afterwards. And I'm hearing two things about gold and silver right now, two very divergent points of view. On one hand, they're saying with the equity markets doing so well, no one's interested in gold, and they could see gold falling to perhaps $1,050 an ounce. Another analyst said, well, once people realize there is a lack of physical gold, if you went and took your gold certificate today and said, well, give me my 10 ounces of gold, you couldn't actually get it because China has bought all the physical gold produced last year. And he said the price of gold could double very easily within a year. David, you're the guy on the spot here. What do you think's going to happen?
Well, I'll be consistent here. What I think is, one, the silver market's already bottomed. I'm pretty sure gold has bottomed as well. And I've been saying consistently that I think we're going to see a good, strong market in the metals this year, with gold reaching up toward the $1,550 to $1,700 level, and silver up toward the $30 level. But I think it's probably going to take most of the year to get there. And they may get there and not hold those levels. But if you look back at 2013, gold started the year January 2013 at the 1,700, now at the 1,200 level. Silver was around 32, now at the $20 level. So it is possible that they could do the same amount of increase that they did as a decrease in the previous year. That's basically what I'm looking at.
Well, so if I'm an investor and I'm taking a look at precious metals, do I hold on to what I have? Should you sell, wait for a lower price, then jump on that and hope it goes up rapidly?
Well, that's a great question. And, of course, you cannot answer that more than in a general way, because it depends on the individual investor. It depends if they're using leverage. It depends what their investment goals are. And there's so many things that come into that, thought process. If you're overweighted in the metals, then obviously you should probably take a look at rebalancing your portfolio. That's number one. Number two is, what are your objectives? If you're looking, if you have the proper diversification, metals is just part of your holdings, and you've got assets in the stock market, I definitely think that's overvalued, but overvalued things can get more overvalued. You'd probably be in pretty good shape. So again, it comes down to the individual investor. If you're in this sector, like totally in other words, you're a resource sector only investor, then you're really going to have to, determine what your personality type is. If you can weather the storm and say to yourself, look, I can hold on for another year or two at these levels and, be able to sleep at night, then obviously that's what you would do. On the other hand, if you are so fed up right now that, every day that goes by causes you more pain, then again, you're going to have to answer that question for yourself. Personally, again, I think, the worst is behind us, but that does not mean that we're going to come up rapidly and strongly right away. And that's, unfortunate, but this is how opportunities are built. And, I'm looking at it more as an opportunity than anything else. However, I've been pretty good at keeping cash all along the road. I've only been fully invested a few times, and lucky or skillful, depending on your perspective, getting some of my trading money out at the $48 top. And believe it or not, I still have some of that left. Certainly could have done better. I could have done better getting the top. But what I could have done better is have hedged a greater amount for a longer period of time than I did. But, it's easy to trade with 20/20 accuracy. I'm not going to beat myself up. I do think the bottom's in. I think take a deep breath, and revisit, which is what I did during my speech, revisit why you are in these asset classes. Why do you own gold and silver? And if you need someone like me to help, make the vindication, help to re-verify the reasons you're in these metals, then so be it. I had a lot of fun doing that, and hopefully I was helpful, because that was my main purpose, was to be helpful to everyone at the conference that is in the sector that certainly has had better days in the past, but I think much, much brighter days in the future.
Well, of course, it's been just a brutal year, especially for the juniors. I was getting the feeling from the people I talked to at Cambridge House is that if you have survived this past year, odds are pretty good that you have good management, you have a good structure, you know how to deal with tough times, and if you can do that, you're probably a pretty decent investment.
Exactly. I mean, I get my hits like everybody, and, I've never claimed to be perfect. Anyone that knows me knows that. And, we do dabble in the junior sector, and some of those stocks, and all across the board, have been beat up. But the top-tier sector has not gotten nearly as beat up percentage-wise as the junior sector. I mean, a lot of these things are off the board now. They don't even exist. And since we structure a portfolio where the safe money or the big money goes into safer companies, you're not down as much percentage-wise as you would be if you had nothing but speculative plays. Nonetheless, it still hurts no matter what. But if you do what we have taught for years, and that is, be careful. This is not an easy sector to invest in. And harbor your cash. You're going to do better than if you, bet the farm on a bunch of long, home run hits type of thing. So we try to balance it out. That's what we advocate. I had a guy that called me recently that has read us for years, and, some of these speculations look so good on paper and the stories are so awesome. But that's true of almost all of these story stocks. So he said, I really wanted to put some more money into some of these, but I did not, based on what you write, what you say, what you put in black and white. And he goes, I am so glad that I followed what you taught, because, I'm not hurting right now. I'm down, but not nearly down as much as I would have been if I'd done what what my instinct told me or whatever I thought I wanted to do, because, some of these stocks look so great. So, not trying to make excuses here, trying to, remain calm, trying to remain consistent, and trying to remain objective. But, the hardest thing for me is to, rattle people up right now and get them to buy this bottom. And it's been my experience through 40 years of investing that people don't buy bottoms. Although I will say that the Cambridge House Conference had some really positive energy. I know this is a little esoteric, it's not like a measurement thing that you can do and get a scale like a Richter scale, see what the quake rate is. But I felt as if most people were rather positive, and I think they're opening up their wallets, and I think that they were ready to start, moving back into the sector. I just had a much more positive feeling the whole show than I thought we might experience before I got there.
Yeah, I think a lot of them had the attitude, we have seen the worst. We're not saying that we're going to have instant good times again. But on the other hand, as I said, if you survive this very radical downturn and dull, boring, and expensive period for many people who lost money, if you can get through that, you can see the light at the end of the tunnel. It may not be the brightest light, and you have to pick the right tunnel. But it's there. And that was just from chatting with people, having a coffee.
Yeah, it's great. Well, good input to me. I mean, it confirms what I think, too. I really, really think that we are on our way. And again, as you've pointed out at the beginning of this interview, there's a lot out there, and I won't name names. I think we got another 2 years to go. I just don't see it. I just don't.
We've also had people on the show who are, I would say, big supporters of a crash of the U.S. dollar. Not today, not tomorrow, but in a couple or 3 years' time, they think the U.S. dollar simply cannot maintain its high level that it has right now. And also when people look at the Canadian dollar falling, well, the biggest reason is that the U.S. dollar is just climbing so fast, so high.
Yeah, well, this goes back to the fundamentals. I mean, there's no fiat currency that's ever lasted forever. They always end up in the dustbin of history. I don't think the U.S. dollar will be any different. Not that it can't morph into some kind of special drawing rights situation or be combined with some other currency or slightly gold back or whatever. It could morph into something different. But I think we have a new currency system ahead of us in the not-too-distant future. I think gold is inevitably going to be part of it, but it doesn't necessarily have to be. It's possible it won't be, but depending on how this thing unravels further, to put your bet on any one currency over another, I think is a bit of a fool's bet. The only real money that you can safely bet on, especially in times like these, is the precious metals. And again, granted, they're off their highs. Now I think that they're, very much an opportunity. And, if you don't know if it's a bottom or not, and quite honestly, who does for certain? But it's low. Now is the time to accumulate. You don't have to buy everything you want. You want to put, $1,000 in, 10,000, 100,000, whatever it is for you, individually. Take that amount and divide it into 1/10 and do it over the next 10 months, something like that. That approach is a disciplined approach, and this is what the professionals do. They accumulate stocks and distribute stocks, or I should better say, they accumulate investments and distribute investments. They do not buy all at once or sell all at once, because if they did that, it would move the market drastically in one direction or the other. So they know how to enter a market and how to exit a market, and you should learn from them and do the same thing.
Yeah, not all in or all out at once.
Correct.
And well, of course, that's a good strategy, too. If you're investing in equities, don't buy everything at once. If you're doing cost averaging, for example, when the market goes down, just remember, you're buying more stocks with the same amount of money. In this case, if you were doing that with gold or silver, you'd be buying more with the same amount of money.
And that's correct. And there's only one caveat, and most people don't, mention it. It very much is important to mention, and that is that you must still be in a bull market, which I thoroughly believe we are. In fact, that was the basic tenet of my start of my lecture there at the Cambridge House. But that works. On individual stocks, you got a little careful about averaging down. Depends on the company and what type and all that. I don't want to go in a big lecture on that. But generally speaking, if you're in a bull market, you dollar cost average into your position, you're doing the right thing.
More with David Morgan next on This Week in Money.
Always consult your investment professional before making any investment decision.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with David Morgan, publisher of the Morgan Report, which you can find online at silver-investor.com. David, one of the things that people are wondering about with gold is the fact that China has been snapping up every little hunk of gold they can find, and they're encouraging their private citizens to do the same. And India, they've put a huge penalty on buying gold directly, but I've heard that gold in India is now the most smuggled item. It's not drugs anymore. So what kind of an impact is China's buying spree going to have on gold, and what about India's secret market in gold?
Well, the short course in, world monetary history is that, he who owns the gold makes the rules. I mean, if you look back just in the last couple, meaning the more recent ones, you had the British Empire, where the sun never set on the British Empire, blah, 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 blah. Basically, the pound sterling, you had precious metals backing the currency, and they basically ruled the world. That changed with the United States. The United States had most of the gold after World War II, went on a dollar standard, which was as good as gold or sound as a dollar because it was backed by gold, and they owned most of the gold, at least at that time. And now the gold is shifting to China, so it looks as if the shift has gone from the Anglo-American axis, the London-New York axis, where the power was held monetarily and other ways, militarily as well, for a very long time, and that shift is now taking place and has been taking place for quite some time. As far as the smuggling goes, I mean, it's, you call it the black market, you call it the free market, you can call it whatever you wish. People are going to do what they need to do to get what they want. This is from time immemorial. This is something that is not any big shock to me, and it's almost as if governments notoriously do something the opposite of what they want. In other words, they put on price controls to make prices stable, and they become more unstable. They put an excess tax on gold imports, so they get more gold imported than ever before through smuggling. So what it really says is that, one, gold is important. Two, I think it also states that gold is, or suggests that gold is more important or better understood in those cultures than they are in our culture, or I should say North American culture. The idea of the producing countries are the ones that accumulate gold. So you have, the British Empire at one time, a producer, accumulated a lot of precious metals. That shifted to the United States, a big, big producer, accumulated a lot of precious metals, and now who's producing a lot? China. And China, of course, is accumulating a lot of gold. So it's the same old story, really.
What if everybody who had a gold certificate today, and this is just a hypothetical, what if they said, I want my physical gold, I want my 10 ounces or my pound of gold that I've invested in, I want that physical product delivered to my door?
Well, it would be mass hysteria. I mean, in that thought experiment, there's a lot more paper certificates for gold and silver than exist in physical reality, and that's a very, very big problem. And this is something that's really subtly starting to be uncovered now. I mean, this thing about Germany that we harp on constantly, but you had this Dutch bank, similar situation. You get anecdotal stories here and there on individuals or funds that are not getting the gold and silver that they have, certificates for. So it's very, very unruly, but it is a fact that these things are taking place.
Well, it's interesting. Germany, I forget the amount, 300 tons of gold, was it, that they sold off, and they asked for it back, and they were told it could take, 10 years to get it back?
Yeah, Jim, you're right. I mean, it was a pathetically small amount that they were given back, and it wasn't even matching what their original gold was. So, this thing just goes on, and it's, really a lot of red flags. Of course, you don't hear anything about this in the mainstream media. You only hear it in the alternative media like us that even mentions these things.
Would you be concerned if you were a holder of gold that, that piece of paper really isn't worth it, or that piece of paper is actually worth a lot more than it says it is?
Well, I'd be very concerned if I held any of my core holdings, gold or silver based, that I couldn't put my hands on.
Somebody suggested to me, because there's the possibility, the legislation exists for the government to seize your gold. They did that back in the 30s during the Depression. Would they do that again if they got into trouble?
Well, there's all kinds of people who think all kinds of things on this. I mean, first of all, they didn't really seize it from the aspect that they paid you the value at the time, and then they revalued the dollar down, which pushed the gold price up by 70%. And there were a lot of people that didn't turn in their gold, even though, contrary to popular opinion, there were a lot of people that held their gold and didn't do it. So, that's, again, an individual choice. I'm not advocating anyone to do or not do something. What I'm saying is I doubt it will be confiscated. I really, really doubt it. But there are others that have a different tenet on that. They have a different point of view, and they think that something else could take place. And if that's the case, then you can protect yourself in various ways. I mean, you can have it outside of a certain jurisdiction, as an example, or you could have it in, a location, obviously, that would be very hard to find or something like that. So, I mean, there's lots of ways to think it through where it works to your advantage.
Well, we're not going to hand in all of our gold certificates right now. What I'm wondering about the price of silver is that it's not just a precious metal that you might want to invest in as perhaps a fiat currency, but it's a very useful industrial metal. And at a certain point, the demand for it is going to, again, with electronics and so on, being what runs the universe right now with high-tech gadgets, is there going to be a run on silver simply because they need it to complete all those circuit boards?
Absolutely could happen, and it's going to be driven by investor demand. I mean, when the investors have enough silver that the industrial users find out it's a tight supply, then it will start a feeding frenzy. So you'll find the Sony corporations of the world as an example, one of many, that will say, we're going to get delayed on our silver delivery. I need it now. I'm willing to pay this premium to get it now. Otherwise, we've got to shut down our assembly line of, XYZ game boxes or whatever, PlayStation 2s, whatever they make. And so they'll pay a premium, and then Mitsubishi hears that as well. So these things can happen very rapidly, almost overnight. I'm not saying that it will, but it could. And again, everyone's kind of fat, dumb, and happy, as the expression goes, to assume that things are going to continue the way they were all, today, tomorrow will be the same, when the reality is it could change rapidly unless you're prepared for that. Because very, very few industries stockpile anything anymore. Everybody's got this just-in-time inventory mindset that no matter what we need, we're going to keep our margins very high by just buying exactly what we need and no more. We don't have to warehouse it. We don't have to pay for warehousing space. It saves money, and on and on. There's, some good, valid thinking behind that until the shelf is empty and you go to order more and you can't find it.
Is there a possibility of that? Do you see right now a certain industry that's going to have to grab a lot of silver quickly?
Not at this point in time. Honestly, I don't. But I do see that condition will take place. Again, it's going to be based on investment demand. It's going to be the investors that have sucked up most of the available physical supply. And then when an electronics manufacturer, cell phone manufacturer, or Dow Chemical or DuPont or one of these big multi-conglomerates that use lots and lots of silver need it and go to the marketplace to find it and find out that it's all held by tight hands by investors and there isn't much available for their applications, the industrial uses, then they'll start a bidding war. You'll start seeing the price come up and up and up because they don't want to shut down their assembly lines because they can't get a product that's absolutely vital to make the product that they need.
Any chance someone will try to corner the silver market again like the Hunt brothers did back in the 70s?
I think almost impossible. I think the only way that even has a remote possibility is by a nation state. I think you might, who's going to tell, China that you can't have this silver? They could certainly tell an entity, a pension fund, an individual, sovereign wealth fund, something like that, you can't have it. But to say to a nation state, no, you can't. It'd be a little tougher, but that's about the only thing I would say that could potentially take place. I doubt we're going to see that, by the way, but it could.
Would one of those same kind of investors, a nation state, depress the price of silver further by a big sell-off?
Could, but there's no real silver held by nation states anymore. That could happen in gold somewhat, and we've seen it. I mean, we saw England, we saw what Gordon Brown did, selling their gold at the bottom. And I think, going back on the same point, Jim, I think it's more likely to happen in gold. I mean, basically, the way I see it, China's already saying, gold, 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 gold. And you're not seeing China say we're not getting our gold. Germany's saying we're not getting our gold. Well, how come China's getting their gold and Germany's not getting theirs? Interesting thought, isn't it? So I think gold probably holds more potential right now to cause a squeeze in the physical market than silver does. I used to think that silver would probably be the place where this would manifest first, but, I can be wrong or my thinking can be changed, and I've actually changed my opinion here in the last several months, thinking it looks to me now that gold is going to be the place where you're going to see a squeeze in the physical market.
Why has China decided that gold is the place to be? What do you think is their ultimate design?
I think it's, as we talked about earlier in the show, it's the fact that gold goes historically to the producer nations. China's producing a great deal. They certainly aren't able to cover their agricultural needs by themselves. They have to import. But nonetheless, they're manufacturing a great deal and continue to do so. So they accumulate wealth, and gold is the best store of wealth for the last several thousand years. They know it. We know it. During my speech there at the Cambridge House, I talked about how the Bank of International Settlements used to account for all the other banks on the planet. And they accounted in one thing and one thing only, and that was gold. They didn't care what your fiat currency position was or what your swap arrangements were or what your ultimate derivative exposure was in the interest rate world. All they cared about was how much gold did you own. That was it. And that's a pretty good way to account for things in reality, and that's how they used to do it. Of course, this is all by and by, and you haven't seen that in a decade or so, but that's how it used to be done. My tenet here is that that's really the reality of the world still, but no one ever talks about it. Certainly the bankers poo-poo gold as they keep accumulating more and more.
Right. Well, just don't let the average folk know about it.
Correct. That's right.
Keep it in your secret vault somewhere. Also, I wonder, is China piling up the gold because they really don't expect the U.S. to pay back the billions they owe in the loans they got from China?
Yes, I'd say it's slightly different than you said it, but that's the idea exactly. Yeah. That they'll probably get paid back, but it won't be worth much. But in the meantime, if they're able to suck a certain amount of gold off of wherever, out of the West, let's say, or Western banks, then, they've covered their bet, so to speak. So as the fiat fails, the gold will come up and be recognized as having greater value than it does right now. So I think that is part of their plan, definitely.
And David, again, your newsletter, maybe remind folks about how to find it and what they might find in the newest issue.
Yeah, the best thing to do is go to themorganreport.com, get on our free email list. You'll get a weekly update. You'll get the 10 rules of silver investing. We'll give you some tips on how to not get burned in the coin market. And then there's also a YouTube channel, Silver Guru. There's also a Twitter feed at SilverGuru22. And then for those that are serious investors on the right-hand side, we outline the 3 different levels of service for the Morgan Report members.
Thanks a lot, David.
My pleasure. Thank you, Jim.
After the break, Martyn Element on This Week in Money.
Randy Elvis Frisky and his Las Vegas show band relive the movie music memories from Blue Hawaii to Viva Las Vegas, in Ladner, Chilliwack, Maple Ridge, Nanaimo, Victoria, Sydney, Courtenay, Campbell River, Surrey, Kelowna. Details at randyelvisfrisky.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Martyn Element of Element & Associates in Vancouver. He's a corporate consultant who focuses on sourcing and pursuing new business ventures. Welcome to This Week in Money.
Thank you. Thank you for that introduction, Jim. Welcome to all the listeners.
I know one of the hottest movies out there with Oscar buzz and so on, Wolf of Wall Street. We'll have a comment on that, just how realistic is that movie. And you have something to say about the opposite side of the people who made money in all those deals. Mm-hmm. In Canada, we have, the Canadian Stock Exchange, and it's going by that name now, has been around for quite some time, but hasn't got the attention that it's getting right now. And it's kind of in a battle with the Toronto-based Venture Exchange. We'll talk about the mood of people at the recently held Vancouver Resource Investment Conference, sponsored by Cambridge House. Marijuana stocks. People making marijuana for medical purposes could be in the money big time. And we'll also talk about some of the big-time personalities you've dealt with lately and how they're feeling about the economy. Well, first of all, let's talk about the recently held Cambridge House event in Vancouver at the Convention Center. What did you get what kind of feeling did you pick up when you talked to investors there?
Well, I'm going to state some, to me, obvious, but probably not so much to a lot of the listeners. The show has, it's always changing. It's clientele or people visiting the show in previous years, not so much last year or the year before for that matter, but in 2010 and 2009, there was an awful lot of retail investors, awful lot of registered retail. Well, there wasn't this year, and there wasn't that much last year, but there were a lot of people registered, a lot of industry people. And more, much the same as the biggest show of its kind, I think, in the world, in Toronto, the PDAC, and it's big because it covers off the big boys, a lot of the senior mining companies as well as the juniors. But, it's an industry. It's a chance for people that come from every corner of all over the place for here locally for junior mining stocks. And it's a chance to mix with industry people that are in, and you can cover an awful lot of ground in a matter of 48 hours that would, cost you a lot of flights and times and effort. So it was, in that regard, it was a fantastic show. It was a well-attended show. There was a lot of people there. So I personally gave it a major tick. It seemed to have a much busier than previous years. There seemed to be a real pace of things happening. And, of course, to back that up, some of these stocks, particularly recently the uranium stocks, are getting a bit of a head of steam up. We've seen an approach of a takeover from Goldcorp of a Cisco. Cisco has since rebutted the takeover. But we're talking, into the billions of dollars there. There was a bought deal on a junior here in the last few days called Torex. That was $161 million financing. There's action, and it's nice to see it after such a long, long time. But the point I wanted to make about the show is very interesting. And as you know, I try to talk about things that are going to be happening and some things that are happening. I was privy enough to have lunch with I had breakfast with Joe Martyn yesterday, which of course was Tuesday morning right after the show. It was a Sunday and Monday show, and Joe is the founder of Cambridge House, and 19 years ago, and he's built it up to be, I think, the biggest shows of its kind in the world today for what he's doing. And if it wasn't the biggest, it's only going to be him or Mines and Money. But he said, and his youngest son came along, and what I found fascinating is that the show is the show. It's well attended. There's an awful lot of things going on at the show. But it's what we're talking and what we're doing today, although this is going to be broadcast on radio, I think, this show, but really the numbers and the volume of people comes in on the Internet. And what his son was explaining is, and he didn't quite put it this way, but this was my terminology, think of the show as being the big top. Think of the show as being the Cirque du Soleil with their shows. It's the re-telecast and the Internet people that go on the Internet to try and capture what was captured under the big top there at the convention center of the show. That's where the numbers are shifting. Yes, the attendance was 5,000-6,000 people, maybe a bit more of registered. But the numbers of people visiting some of the speakers are dwarfing that number. There was one speaker, I can't quite remember his name, and his son sat down and said it's less than 24 hours, and one of the speakers had 6,000 hits, Jim, since he'd done his speech at the show. That's where the numbers get very interesting, and that's where the future lies. And by that I mean Joe being the successful showman he is, and he says, I'm selling entertainment, Martyn. I think we used that word last week as well on my show, but he said, really, his son was pointing out that he's educating his own father, who's very smart at what he's doing, but, that the numbers and the future lies very much on the Internet, and it fascinates that these targets move so fast. So there you go, Jim. There's a wheel within a wheel, and that's where the future goes. Yes, the shows will still have to go on, but it's the re-telecasting and capturing the essence at the show, which is very important. I was able to cover a lot of ground in a very short space, but that's what those shows are all about.
When I chatted to people attending the show, they said the mood was different because the last year has been very tough for the mining industry, especially for junior developers. Many of them will go under or they've been forced to merge, but they said they felt those who survived will be stronger and more prosperous.
Yep, I couldn't agree more. But, this is a very critical time, this month end, because you've got the audits going on for so many of these companies. That's where the, not big money, but, depending on how upmarket you want to go or how much you want to do on your audit or how complicated your audit is. But the audit's got to be, at the end of the day, it's probably around 25. It could be as high as 50, depending how complicated, if it's a small junior. That's a lot of money for these small mining companies right now. So a lot of them are facing that, that dilemma at the moment. And so that's a lot of people's minds, a lot of people trying to make things and hang on per se. So if there is, and there's some fees that need to be paid this next month as well. So we might see some shoes fall, unfortunately, in the next 30 to 60 days for sure with some of these mining companies.
And this is also connected to I think, what is a growing battle between the Canadian Stock Exchange and the Toronto-based Venture Exchange. So many people, especially junior companies, say they can't afford the very high fees charged by the Venture Exchange, so they're turning to the Canadian Exchange, which they feel is more affordable. But do they get the same kind of customer service?
Well, Ned Goodman is making sure any which way he can, along with another big name, Tom Caldecott, they are making any which way they can life easier for the CSE players. And, for instance, there's a fee. They pay a monthly fee on the CSE, and it used to be $500 a month, which is nothing compared to the equivalent fees for the TSXV listed companies. But they've just reduced that, I heard yesterday, to $400. And there isn't the same reporting costs anywhere near what there is on the TSXV. But the TSXV is also working so hard, thanks to the Shane Nyquist of the world and others, that people like that are working, and Joe Martyn, by the way, too, very, very hard and involved behind the scenes, to try and make the life easier from a financing point of view for the TSXV deals. And what I said and what I think is, it's not that, and a battle it may be, but it's a healthy battle. It's a battle, and my comparison was WestJet and Air Canada. WestJet, the startup, CSE, it's been around 6 or 7 years now, but compared to the TSX startup, they are striving to get clients. They're trying to shave things and keep the costs down. The TSXV is trying to do it right. They have a tremendous reputation around the world. You pay for that reputation. You're going to have to pay, but if the price is too high, people will go to the CSE. And so the winner, the people, the whole situation, of course, much like WestJet in Canada, the winner is the consumer. The winner is the retail investors. The winner are the companies themselves, and it's a healthy competition. It's not a by any means an unhealthy competition. And there's another exchange I think that's getting recognition through the RBC Bank that I was hearing about today. So, but it's at the end of the day, yes, there's a competition going on. Yes, the TXV is going to do a very major move here shortly about shareholders being able to do a private placement without having to do all the normal hurdles they have to go through, and that's very close to becoming law. Hasn't been passed in Eastern Canada, but looks like it's going to probably get passed here in Western Canada. CSE is going to have to keep up with that. And so my overview on the whole thing is it's a healthy competition, but it's great to watch, and it'll help some of these small companies survive longer, and it's not a bad thing that CSE is undercutting a lot of things that the TSXV is doing in the long run.
Get rid of the bureaucracy, perhaps.
Yep, that's arguably so, but I think your group and your radio station is going to do a whole show focused around that, and I think I'll certainly be listening to that. I'm reporting, I'm not making, but the people that are making, I think, are going to be talking to you, Jim, and your whole broadcast. So watch that space, listeners. It's coming.
More with Martyn Element next on This Week in Money.
More and more people are looking to the Internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're chatting with Martyn Element of Element & Associates in Vancouver. We were talking about the movie Wolf of Wall Street, and again, it's got a lot of Oscar buzz. It won some Golden Globes. But you said you have sympathy for the other people, the other part of the equation, the ones who didn't make millions, as portrayed in that movie, but the so-called suckers they talked about.
Well, I don't want to goody two-shoes and all those sorts of expressions, but I did see this chap about 2 summers ago. A very substantial financier, Stan Bardi out of Toronto, I think, had him as an after-dinner speaker in Geneva that I was at the conference.
The one the movie's based on.
Yeah. And it was at the end of after dinner, and this guy started talking, and I left the room. I just didn't like, all I could think about was it sickened me a little bit, and I'm trying not to be too, as they say, goody two-shoes, but it wasn't good stuff. We joke about it sometimes and one thing or another, but this guy was real, and he was very monotone. He wasn't the flashy guy that you see in the movie when I heard him speak. And I slipped out the back without making a big deal about it and met a really good new friend, actually, in Geneva. But I didn't like that side of things. And then the movie is very repetitive. It's very well done. He's very funny. I think DiCaprio, rightfully so, perhaps got the Oscar for his show that he did. But really, the thing that rings out for me, and ironically, after I mentioned this to you last week, I saw an article in one of my Bibles, or perhaps not the right expression, but one of my periodicals is the Spectator magazine. It was one of the lead articles. And what it said is that, yes, it was a reasonable movie, perhaps too repetitive, same again. But they said, unfortunately, it was really showing you at that level, but you could take the same scenarios and you could paint them into the bankers of some of the biggest, well, I'm not going to name them, some of the biggest brokerage firms in the world, some of the big boys that were doing similar things with billions and billions of dollars, with the greed, the carrying on, and the government was not keeping its eye on the ball. Not that they can be the be-all and end-all of everything. The government is the government. But the upshot is what we've all had to live with, for the last 3 or 4 years. The party came to an end, and there's still heads rolling on it. So it was doing a comparison, taking that's in the, the ma and pa people and the smaller retail investors that are ill-equipped to take on these situations, and then it was sort of putting it into, capsulizing it into bringing it up into the really big numbers, and the whole mortgage problems and I think I'd be using the right word to say scandals in many parts. But anyway, so it's a show, and nobody mentions the people that were plowed under. So there's a big message there, but you wouldn't know it from that movie. And it really just showing entertainment. So that's what I was referring to when there's the other side of the whole story, of course, And I've seen it, but no desire to see it again. I think that it's entertainment is what it is, Jim. But it's very sad entertainment.
Industry going to pot. Here in Canada, the federal government has up for grabs just a few dozen licensed marijuana, medical marijuana production certificates. These few producers will produce all the medical marijuana needed in Canada. And if you're in on one of those companies, your possibility of making tens of millions is there. Is this a hot topic around the so-called business hot stove?
Well, I think we mentioned at the end of November or the first week of December on the digital show, Jim, that I'm on the front line, and I had 3 fellows come in to see me in 1 week for medical marijuana-related deals here in BC. And one of them was presented by a young man who I have a very high regard for, who's done very well at a young age, very smart, dynamic fellow. And that's when I really said, oh, hang on a minute, he's bringing this in. So I looked at it a lot harder, and, I thought to myself, wow. And then the penny drops, of course, that, today it's medical marijuana, but if the inevitable happens, and depending on who you talk to, they did say 10 years, and now I'm reading 5 years in certain parts of the world, could be a lot less than that, like in British Columbia, that we could be seeing recreational sales of marijuana, as you are seeing today in Colorado. Then, of course, those same licenses, those same people that are making marijuana for medical purposes, all of a sudden, well, the reason that I'm told that the cost per ounce of recreational marijuana in Colorado went over $400 an ounce, and the reason it did that was because of the supply. There was no supply. Just another story in the naked city, Jim, and it's been a pleasure talking to you today.
Well, before we wrap up, you said there were some young personalities in business. They're not getting much attention these days, or not yet. But who are some of the young tigers you think that we should have an eye on when it comes to developing things?
Well, I think there's a whole bunch of them, starting with, I've mentioned him before, I think this gentleman, Neil Curry, with his idea of using stocks as a stock pool, I think it's called, where they literally kind of do a betting on who's going to be the best performing stock. Neil's doing a fabulous job there. And there's David Duggan, who runs a virtual company regarding stocks, and he's the guy that really masterminds utilizing the Facebook, utilizing a lot of these other mediums, which, is very controversial, by the way. I'm hearing a lot about that lately, too. But David is a charming, dynamic, and I've watched him grow from the industry, and he's doing a great job in the industry as a whole. And there's lots of others, too, that we can talk about perhaps at another time, Jim, and I'll do some more work on that,
Well, Martyn, thank you very much for chatting with us.
It's been a pleasure, as always, Jim.
Thanks to our guests, David Morgan and Martyn Element, and thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.